Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. I hope everyone had a good Memorial Day weekend if you celebrate it in the United States. I want to wish everybody have a Memorial Day, especially people that have lost loved ones fighting for our freedoms, to allow us the ability to talk about the stock market and have free enterprise and capitalism in the United States of America. The older I get, the more I actually take Memorial Day seriously and not just another day to have off from school like I did in high school. I actually start to care a lot more about it. And so happy Memorial Day to everyone who celebrates. I hope everyone had a good weekend. We are back with Daily Palantir, and a couple things in this episode. There's not a ton of news, but there are a couple of tweets I wanted to show you guys from people in the community. I wanted to go through a couple of those tweets, kind of just talk about some of the opinions I have on how people are thinking about Palantir. I want to talk a little bit about the stock action in the last basically 15 minutes of the episode. If you haven't seen Palantir Weekly, it's a clip from Palantir Weekly specifically about Palantir versus Snowflake and what's going on in regards to Palantir versus Snowflake and some of the issues that at least us on the Palantir side are seeing with Snowflake. I think Snowflake is undervalued. I think it probably gets back to $200. That's just my opinion, given that I think management is sandbagging the growth. But from an actual investment perspective, it is becoming a bit more interesting to me what really is the bull case. So we talked about that in the last 15 minutes of the episode. If you already saw Palantir Weekly, you don't have to stick around for that. But if you haven't, then you can check out that clip at the end of the video. All right, a lot of stuff to get into. Hope you guys had a good weekend. Let's get into it. So let's start off with the stock. We've talked about the stock a little bit here and there over the past couple of weeks, but let's just do a quick little discussion on it. Palantir right here, 21.05. I bought another 10 shares this morning. $20.96 after hours, 21.05 on the day. Again, my perspective on this is as follows. I basically believe that Palantir did what they needed to do on earnings. They put up the numbers, they showed the growth, they raised the guidance. Management is not, or not management, the market is not giving management the benefit of the doubt here and giving them an extra premium. And the reason for that is because Palantir already at a PE of 160 and market cap at 46 billion. If we look at some of the other SaaS names, including Snowflake, all of them had a rough day. Zscaler down, Twilio's down, Net is down, Cloudflare, ServiceNow is down, Adobe's down, MongoDB is down, Atlassian is down, CRM is down. They have earnings tomorrow. Oracle slightly up on the day, and then you got Snowflake here that's down 3.47%. Datadog is down. I think all of these SaaS names are going to move together, and so just the reason I'm showing this is because I want people to see that it's not just Palantir that's having a string of red days or flat days, even though the market's hitting all-time highs. It's pretty much the entire SaaS sector. Yes, there's individual names that are spiking here and there, but the broad majority of SaaS companies are having a bit of just like a re-rating on their valuations. And that doesn't mean that's going to the downside, but it just means I think the market is saying, look, we believe that you guys are hyperscalers and you guys know how to grow and you guys have great adjusted operating margins and all that stuff, but we think you're a little pricey right now. And because we think you're a little pricey, we're just not going to buy your stock. We're going to wait for you guys to continue to grow into your valuation, which is what I think the street's waiting for Palantir to be able to do. Palantir went from like 18% year-over-year growth to 21% year-over-year growth. It would not shock me if by next quarter they're closer to 22, 23%, and by the end of the year closer to 24, 25%. If that's the case, that PE will come down. We're probably going to do more than $2.6 billion in revenue. And the street will have a much easier time matching the actual analyst targets, which on average are all above $21. I mean, all of them range from $23 to $35. And I think the average is around $23, $24. We're at 21. That's why I'm buying. I don't see us going below 20. Is it possible? Yes. I don't like buying at 24, 25. I think that's paying a little bit too much right now. And I just don't want to pay that much per share. So I like the 20.50 range to the 21.50 range, and that's where I've been buying. So for me, it's like 24, 25. I kind of don't want to keep adding to the position there. Definitely don't think I'll get an opportunity below 20. If it does, then great. If not, I don't think it's gonna happen. So 20 to 21 is where I buy. And I do think at some point, once it gets to 25, 26, 27, then investors are easily going to want to pay that much. The narrative's going to be there. The tailwind's going to be there. AI is going to get more momentum. NVIDIA is not going anywhere. NVIDIA's continuing to grow. They had a monster earnings. Their GPU demand means that there's more demand for training models. More demand for training models means that more LLMs need to be attached to data. Palantir is the glue with AIP to be able to connect all that stuff together. So when you put that all together, I'm like, okay, so NVIDIA is showing that the market is real for this. Palantir has to capitalize on that market. If Palantir can keep growing customer count, they're going to capitalize on the market with top-line revenue growth. Investors will eventually pay $26, $27, $28, and then everyone's going to be asking, why didn't I buy more at 20? I think that's how the story plays out. I don't know if it's this year. I don't know if it's early next year. I don't know how or when that plays out, but I think that story does play out. And so for me, the stock price being flat after a really, in my opinion, great earnings. Not a phenomenal earnings, but a great earnings, to me is an opportunity to just average down, and that's what I'm doing right now with Palantir. Okay, couple tweets I want to go through from the community. First of all, one tweet from myself. Here's a minute-long clip. Stanley Druckenmiller back into Palantir. Here's a minute clip I found of Karp actually talking about why their software sells when times are bad. So here's Karp talking for a minute, and probably one of the reasons that Druckenmiller is back in Palantir.
Advantage one is just in hyper kind of euphoric orgiastic times, you have essentially competition for our talent that's real. And so, you have lots of companies that are going to fail, but they prevent people from coming here, and people who, have frustrations like, lots of frustrations like shadow hierarchy and, various frustrations. I was going with people, and it's like, but instead of fixing those frustrations, they join like insect.com and enjoy the perfect life while failing. And that's actually been historically very, very tough for us and frustrating for me personally. Then you have like what I tend to think in bad times, you have to answer really simple questions that are not theological. Like, what does your company do? Why would someone pay you more for it than you paid to build it? So like, can you, and what does your balance sheet look like? Like, do you have money in the bank? How much money do you have in the bank? Do you have debt? Are you building things that are useful? Are you building things that are going to be useful tomorrow?
I think this was a good clip, and one of the reasons I wanted to show it is because, again, Karp's basically saying, hey, we have the best talent in the world. The reason we have the best talent in the world is because they have a mission when things are bad to stay and to actually care about executing against the company. And anyone who chooses in an economic downturn to go work for some dumb company that's not actually doing anything in the world, they end up realizing they're losing a lot of passion and meaning in their lives. And so that's why Palantir is one of those places you want to work at. Speaking of Karp's philosophical ramblings on the nature of existence and what it means to work at a company that has purpose and meaning, and also what it means for that company to actually execute, John, with this awesome tweet today, Palantir's Alex Karp will be coming out with a book. They announced this a couple months ago. I thought it would be out this year. It is going to officially be released on February 18th, 2025, and you can pre-order right now on Amazon. It's called The Technological Republic, Hard Power, Soft Belief in the Future of the West. This book is going to be exciting. I mean, a CEO being able to put out all their thoughts and opinions and ideas. Karp, obviously very philosophical. I think a book is the proper medium for him to get his thoughts and ideas out into the world. This is going to be exciting to see, and it'll be fun to see when this book comes out. Okay, last two tweets before we get to this Snowflake clip. One clip by Crossroads, awesome community member on Palantir. I'll have his Twitter and Arnie's Twitter in the description, so you can definitely make sure to follow them there. 3 years ago, Palantir closed at $21.81. If you held and did nothing, not averaging down from then to today, you'd have lost a little money and a lot of time. Yet, the company is not the same. Revenue, 2021, $1.54 billion. 2024, $2.7 billion. That's up 75%. Net income, they lost $520 million. In 2024, they've had a net profit of $790 million. Other changes, first software prime, FedStart, FedRAMP initiative, NHS contract, that was $480 million. AIP platform is out. Boot camps, over 900 we've done. Healthcare expansion is the new Skywise, now 20% of beds in the United States. The price is the same, but the company is not. One thing I think it's always important to remember that although the price is the same as it was years ago, the company fundamentally has changed, and they are trending in the right direction in terms of what they're doing and executing on, which is something to always remember. And then one other tweet from Arnie right here. I thought this was a great tweet. He says, Palantir is my perfect company. Number one, reoccurring revenue. Number two, anti-fragile amid chaos. That's what Karp was talking about just now. Employees are mission-driven and excellent, and I know because I spoke to a bunch of employees in DC, and all of them are actually on a mission. Visionary leadership ahead of the market. Founder CEO who speaks his mind, and he's not afraid to. Strong free cash flow, 35% margin. Excellent balance sheet, $4 billion in cash. Ability to build new products from within. No M&A dependence like Snowflake. We'll talk about that in the next clip. Dominant position in specific niches. Huge market to take. AI is a $1 trillion market. Network effects enable growth at scale. Improves the lives of clients across the world. Go-to during emergencies. Ukraine, the pandemic. Best community of passionate investors. That is a moat for a company at the end of the day. We are retail. The reason Palantir survived at $6 because Wall Street wasn't buying the stock. And because of that, Wall Street ends up buying the stock at $20. And they win impossible missions like the NHS contract and Titan. So I think those, it was a good rundown by Arnie in terms of why Palantir is so special and important, and something to think about when you're analyzing the company years later, ever since it got to the same price at 21 in 2021, 2024, just a different company. All right, so final part of this episode is an analysis of Snowflake and Palantir. Snowflake has done a variety of things post-earnings. They've built this new LLM. They're decreasing their margin guidance to be able to continue to spend on GPUs, more acquisitions. I'm a bit confused on the trajectory of Snowflake. Maybe I'm reading this wrong. If anyone uses Snowflake or is an investor of Snowflake, please put in the comments your thoughts and your opinions on why I'm reading this wrong. Again, I do think Snowflake's undervalued. It can definitely go higher from here. There's not a question about that. My argument is, as a long-term, decade-long investment, do I really see the value in Snowflake over Palantir if I had to pick between the two? So let me know what you guys think in the chat or in the comments. Thank you all for listening and watching. And here is a clip from Palantir Weekly, full episode linked in description on Palantir versus Snowflake. Thank you guys, and I'll see you tomorrow. All right, so I got a couple things I want to run through. Snowflake had their earnings. They grew 33% year over year. That shocked people because most people thought they were going to grow around 25, 26%. So they beat on their earnings. They ended with $4.5 billion in cash. They bought 3 million shares at an average price of $173. The stock fell to $145 in the quarter. So they didn't really nail the bottom, but they definitely got it, not at the top at $237. They have about $900 million left. They raised guidance to $3.3 billion for the year, which would be 24% year-over-year growth. Palantir is at 21%. So, and Palantir is probably going to get to like 24, I would argue, by the end of the year. So on par with Palantir. And this quote from the CFO is really interesting. We are lowering our full year margin guidance in light of increased GPU related costs to our AI initiatives. So their margins are going down, or at least the guidance for those margins, because they're starting to train or pay for services necessary to train their large language model called Arctic, which they are open sourcing for the enterprise. On top of that, Arnie found a lot of interesting stats from them. He saw Snowflake spends 4x Palantir's costs in R&D, and one could argue they're innovating much less, given they are acquiring 3 companies over the past 18 months, looking like they might acquire another company, whereas Palantir is building everything from scratch. And Snowflake's stock-based comp over revenue was 40%, whereas Palantir's was half that at 20%. So the question is, are we all dumb and Snowflake's actually out innovating and really building, and they're spending the right money, and even though they're not profitable, they're growing a lot more, and they're really creating this major game plan? Or are we exactly as correct as we've been saying that, hey, like Snowflake might be a great company, but it's not the transformational enterprise software company that Palantir is. And these numbers are starting to creep up and show that the valuation is insane. The stock fell 4%. The stock really didn't rebound today as we had a green day. And, ever since the CEO left, it hasn't even touched that 200 level again. What do you guys think is going on with Snowflake? Start with Arnie and then Vince.
I think, as you said, the company is a good company. It's not a trash company. It's not a scam. It's just not that great company as the narrative that we were pushed in the last, say, 5 years since the IPO is. So now what we were talking about, the structural weaknesses of the business model, I think they're starting to emerge. Right now, the growth is not that stellar any longer. So it means that their core product is probably getting more and more saturated. Essentially, they reached already a big, like the biggest number of customers that could easily pay a lot for that has already reached. We're talking about a solution that is relatively fast to adopt. It starts scaling relatively fast. So that's why you have a relatively very strong net dollar retention. The problem is, so far, it doesn't really seem a product, a company that is set to scale massively. It is very fast to reach up to this point, but from here, you have the gravity going against you rather than helping you with like how it happened for Apple, Google, Microsoft, all these companies. The bigger they became, the faster actually they were able to keep growing. And I think that is part due to the product, partly due to the business, how it is structured, that relies very, very, very heavily on sales, which means in order to keep growing, you need to keep hiring new salespeople. 1/3 of a company is just salespeople. In Palantir, the proper sales are like literally like 1-2% of a company, something like that. So there's a structural difference with Palantir, and I think these comparisons, that the one I showed you, help seeing the dynamic, even if they have a different company, different focus. This company is like one company scales, and Palantir with the same resources is able to keep building a new product. Like, remember, look, they built AAP here, the most revolutionary product for the company, and you never see a bump in the R&D. On Snowflake, you have this very strong line because, oh shit, we don't have a product here. Let's build another product. Oh shit, we don't.
Dude, that's a
know.
good point. I don't think anyone in their right mind, Brad Gerstner would say Palantir is more innovative than Snowflake. Okay, maybe he won't, but still. So like, but if we can agree that Palantir is more innovative than Snowflake, and this R&D cost is basically flat, how the fuck are these guys spending a couple $100 million every other quarter to build an LLM? To like, is that it?
And it's worse because then they end up buying companies. It's not even that you get new products out of this; they still have to do M&A.
Yeah.
Well, when you make M&A, you start probably the M&A has contributed for this cost to go up, so the R&D to go up, because if you buy a company that has no revenues and just makes R&D, when you merge, you essentially start writing also their the R&D cost. But that's very telling in my opinion. Like, what's the key difference between Snowflake and Palantir? Snowflake is more focused in selling a product, while Palantir is a platform. So having Foundry that they worked on for like 10 years, building all that data infrastructure for their clients, but also for themselves, made Palantir very fast and very effective into building a new product, because it's like
you just build on top of it. You build on top of it. Yeah.
I mean, it's like AAP is just an additional module inside this very big ecosystem of Foundry. So it is not literally a module, it's a product, but it's like, since that is built on top of Foundry, you capitalize on 20 years of effing work, starting from Gotham, then to Foundry, then to Apollo, and then AAP is just another layer that for you is relatively easy to make, and you know it works because you have all that work.
Dude, I think it's so obvious. I think the 60% of institutional investors that are buying into Snowflake are buying into high growth rates that are not buying into a vision. And with an enterprise data software company, I don't think it's just like Mark Benioff had a vision, dude, when he built Salesforce. And not every enterprise data SaaS company has to have a vision, but what are investors expecting from Snowflake? They're expecting 400 or 500 billion market cap one day, right? Or at least 200 billion, 250, which is a CRM. What's the vision for Snowflake? I understand the vision for CRM. I understand the vision for something like an Oracle. I don't really know and I definitely understand the vision for Palantir, even though they're much smaller than those companies. I don't understand what the vision is for Snowflake. On top of that, here's one stat before I get to Matt that I want to mention. So Snowflake here has 485 customers they listed in their current earnings that are paying them $1 million or more. They have 9,500 clients. So basically 9,000 of them are paying like, $10 a month, $1,000 a month, whatever. 485 are paying $1 million. Palantir has 557 customers, and all of them are paying $1 million or more. I mean, or at least 95% of them, right? You could basically say the same amount of customers Palantir has, because every deal they close is at least worth $1 million, something like that. There's probably some that are paying less than $1 million, but all of them are relatively paying at least $1 million. Snowflake has 9,000 customers not really touching that level. So it's interesting to me. The reason I bring this up is because I still like that Snowflake has so many clients, because that's just more momentum. But I think it's interesting that Palantir has the same amount of clients Snowflake has, paying them the same thick amount of revenue, right? Millions of dollars a year. And now Palantir just has to go down to the SMBs. Whereas Snowflake, it seems like they've captured the majority of the value in the big enterprise client space, because that number is not going up that much, but the average client is going up, which is like your mom and pop shop that can download Snowflake immediately. If that starts to scale for Palantir, which every indication seems like in the next year that will start to scale, Palantir will be on par with Snowflake in terms of thousands of customers, even if 90% of those thousands of customers are just people paying $20 a month, and they're gonna have a vision, and they're gonna have innovation, and they're gonna have way better stock-based compensation compared to revenue. So to me, I think it's kind of clear what's gonna happen from that perspective. Matt, your thoughts on any of these Snowflake's earnings if you got a chance to dig into them?
Yeah, a little bit. So we do own Snowflake in the public portfolio with Chris. So it's a couple shares, so not very large. Actually, after the earnings bump initially, it went up like 10, 11% after hours. I asked Chris if we could sell. He said,
no, because Chris got cocky. Chris got cocky.
Chris got cocky.
He got so on my morning open, it's up 5%. He's like, I told y'all, Snowflake, and then market rings.
But going back to the actual earnings in the company itself, I mean, you guys aren't gonna. I'm not gonna say anything new from what you guys stated. Companies can grow inorganically and do it extremely well, but it is very difficult to do. But we have seen it executed very well. Salesforce was mentioned. Broadcom is another that has done absolutely phenomenally by doing inorganic. But Chad said something earlier, which is 100% true as well. The integration piece and making sure the cultures fit and align and how people just fundamentally understand how to do business and how to operate as an entity is very difficult. So when you're doing those things, there's a lot of churn. And with a lot of churn, people's tendency is to throw more money at it. My hope is, I'm not very bullish on Snowflake. I'm more of a Palantir guy. You guys know that. But my hope is that for Snowflake's sake, that R&D that R&D cost budget isn't going up because they're churning and they're just trying to throw money and people at the problem rather than trying to actually fix the integration piece. That's my hope for them. But I will just say, from an observer of business, generally speaking, the synergies that people predict when you incorporate other companies and merge with other companies generally doesn't get realized. And my fear is if you're a very sales-focused organization and you don't have the ability to integrate well other companies that you're buying and non-organically using to grow your organization, to me, that's a tough thing to sell. Versus if you were to have an inorganic event happen at Palantir, they are very technically capable. And I feel like the ability for them to absorb and synchronize with a new organization, yes, there's definitely going to be culture shock. Palantir is a very, I would say, headstrong organization with a very unique culture. And I don't mean that in a bad way. But if you were to have an inorganic thing happen at Palantir, I have a feeling they would take very seriously the integration of how that would fit into their business, one. And then two, they would think very long and hard before they did it. So, to me, as a person who's an investor, going back to why we're here, which is Palantir Weekly, I personally would rather invest in the company that I've observed personally that has extremely unique culture and is a culture focused around technical excellence rather than a high sales focused organization, because I've seen so many people that are focused on sales try to inorganically grow and just absolutely stumble.
Yeah, and as we can see right here in this, I think all those are good points. I mean, when you try to acquire a company, it's very difficult to get them integrated. I was watching an interview with Vlad from Robinhood today, and he was talking about maintaining culture. Culture's hard. They acquired a credit card company, and the only reason he worked, he said, is because they were also Stanford math grads. He was like, that's the only reason we all got along together, because we were all technical. Otherwise, it's difficult to do this stuff. This is a picture of AWS customer base by spend level. And as you can see right here, 86% of their customers have a very tiny spend. 3,351 are the ones that are spending $100,000 a month. When we look at Palantir, I think this is actually a really interesting point that I thought of like 5 minutes ago as I was looking at these stats. Palantir has 557 customers that, to my knowledge, all of them, or at least 85% of them, are paying $1 million or more, right? They're spending, that's called basically $100,000 a month. Snowflake has 485 customers spending $1 million a month, and then they have 9,000 spending basically what this Amazon chart is looking at, right? Like less than $1,000 a month. So the vast majority of value, that's why Palantir is able to put up $2.6 billion in revenue, even though they only have 1/100th of Snowflake's customers, because the majority of the big customers, the BPs, the Airbuses of the world, they're paying Palantir. So the question then becomes, can Palantir just scale down to the game that Wall Street likes, which is, oh my God, they have 9,000 customers. If Wall Street really cares about that, can Palantir get that and have a vision and have a CEO who doesn't fucking leave, right? Versus a company like Snowflake that's fishing for the next thing to acquire. And I guess we'll see if it plays out. Arnie?
I personally didn't we discussed about the stats of Snowflake, 9,500 only being bigger than 1 million. Personally, I haven't realized that that's comparable with Palantir's total customers.
Yes.
And that's very, very telling, because implicitly that tells you that almost all Snowflake revenues are generated by these.
I thought of it
small
5
players.
minutes ago. I just realized when I looked at the 485 number, I was like, wait a second, Palantir is,
And,
yeah.
no, I think it is important to make a distinction that also the stats that we shared previously about AWS refers to the number of customers, not the revenue generated for each layer. And probably the 0.1% of those customers, of those paying very, very much, are contributing to the overall revenues a big chunk. So it's not that all the revenues from AWS are done from these small clients, and it's also not true that all the revenues from Snowflake are generated by these small guys or these other guys. So we don't really know who generates what. In the case of Palantir, we can know that half of the revenues is essentially made by 20 customers, and since we know that also the other top 20 tend to be very big companies, it is absolutely reasonable to see them in the average. Maybe they start with 1 million and then they scale up to 100 million or whatever. With Snowflake, the product is thinner, is more about having this small product that you just scale to the biggest number possible. So that's very telling. If Palantir can find the right key, and we know that they are experimenting now with AAP now being accessible with a credit card, they are experimenting this key to open the door to these smaller companies. I think it is good they are not just spreading it out. They're just trying to make it very carefully, because once the gate is open, is open.
Yeah, 100% agreed. And I think we're going to be right on this whole Palantir Snowflake debate, dude. I mean, like, I do think Snowflake is quote unquote undervalued because it fell so hard. But the more I dig deeper into them, like, what am I investing in? Every time I hear someone give me a bull case, it's like the enterprise data solution for AI, or like the data integration layer for AI. And it's like, I don't know where the AI is. I don't know why they're working on this open source LLM. 24% year-over-year growth. What if Palantir does 24% year-over-year? Like, which I think Palantir will guide for closer to 25 by the end of the year, even if it's 23%. It's like, what are we at invest? And Palantir's at a way better valuation. Snowflake's at like 60 billion. Palantir's at 48. You know, I don't know. I think we're gonna be right on this one.